webinar between MFT and First Mortgage. Today's topic is going to be discussing debt awareness and, more importantly, looking at what to do if you're struggling with your mortgage repayments, and also looking at flexible lending criteria available to all MFT staff available through First Mortgage. So I'm going to share my screen, and you'll see the presentation in front of you, which you can follow along the webinar itself, for those of you who are watching in your own time. At the end of the webinar, I'm also going to introduce to you Anthony from PayPlan. PayPlan have recently partnered with MFT as well, and he'll be discussing options for you to get involved with PayPlan and giving advice from a debt perspective from him as well. So looking at today's agenda, first of all, for those of you who haven't been to one of these financial wellbeing webinars previously, we'll look at a quick overview of who First Mortgage are, the service we offer, what benefits you receive through being an NHS employee, and more particularly through being an MFT employee. We'll then go on to discuss what to do if you're struggling with your mortgage repayments. We'll look at the option of consolidating debt in terms of unsecured debt into your mortgage and what the advantages and disadvantages are of doing so. We'll touch very briefly on how much you can borrow as an NHS employee for those of you who are looking at potentially buying in the future. And then there'll be a quick prediction on sort of the mortgage market itself for 2026, which has certainly changed in the last 2 or 3 weeks given the Iran conflict. Normally there's an opportunity for a Q&A, question and answer session at the end. On this live session, doesn't look like there's many people on here, so I don't think there's going to be any questions. But you will see on every slide I go through, there's an opportunity to book in a free one-to-one consultation with one of our mortgage experts here at First Mortgage. So you'll see on every screen, we've got an email address, hellobath@firstmortgage.co.uk, and our telephone number 01225 970 830. That's 01225 970 830. For you to book in, either give the team a call or drop us an email. We can book in a free one-to-one consultation to discuss any ongoing concerns you've got in terms of any debt you might have, you want to look at your mortgage, or any sort of general mortgage questions for you. So first of all, for those of you who haven't haven't attended one of these First Mortgage in partnership with MFT webinars previously, so that you know a bit more about us. So First Mortgage, we are an award-winning firm of mortgage and protection advisors. We do specialise in the financial wellbeing space, and we've partnered with a number of very large employers and even some small employers too, in both the public and the private sector. So in the private sector, we work alongside the likes of Specsavers and Amazon to provide their staff with free mortgage advice. In the public sector, we work alongside the NHS. We work with over 100 NHS trusts, very closely with the likes of MFT, University Hospitals Birmingham, London Ambulance Service, North West Ambulance Service, a few other bigger trusts out there. And we essentially provide mortgage education and free advice to all NHS staff who are basically looking at either consolidating debt into their mortgage or buying a property or remortgaging, whatever they're looking to do, all sort of different forms of mortgage advice we provide on a free basis. All of our staff are really and highly experienced. We've got over 10 years experience as a minimum dealing with NHS staff. So we've seen all sorts of things on pay slips, from basic pay to banding allowance to shift allowance to various forms of overtime. You sort of name it, we've seen it. So we're very well versed in terms of the landscape for mortgages and trying to obtain a mortgage for NHS staff and getting the most competitive terms and the best outcome for NHS people. So as part of our service, we provide free mortgage education, we provide free advice, and we provide the free process to apply for a mortgage as well. We also provide you with a free protection review. So part of our job is to ensure that we get the mortgage. We also want to make sure that should the worst happen throughout the mortgage term, you can afford the mortgage both now, in 5 years, in 10 years, and 20 years down the line, should the worst happen to you. So we'll also look at things like life insurance, illness cover, and income protection as part of our full review for you. We're open throughout the week, Monday through till Sunday, 9 AM through till 7 PM, Monday to Friday, and at weekends, 9 AM till 4 PM as well. So we're available to speak, obviously outside of working hours, should you want to arrange an appointment with us. So we're a whole of market broker. What does that mean? So typically most mortgage brokers have got access to around 6 or 7 mortgage lenders they can choose from. Because we're a whole of market broker, it just means we've got access to plenty more. So actually we can access over 90 separate lenders from the market, which includes all the big high street lenders, as well as private banks and some of the smaller building societies and mutuals as well. Now that gives us access to over 12,000 different rates on a daily basis. So as I said at the start, our advisors are very well versed in terms of dealing with NHS staff. We're really highly experienced. We've got the best overall advisor From a mortgage perspective in the UK, he's won the award, the British Mortgage Awards, the best new build advisor, and even the best first-time buyer advisor, just to give you sort of an idea of our sort of scope in terms of the expert advice you're going to receive by speaking to one of the team here at First Mortgage. So let's delve into NHS staff itself and sort of, I guess, try and dispel a few myths that NHS staff have about the mortgage process and their ability to obtain a mortgage. First of all, NHS obviously is part of the public sector, and generally, from a lending perspective, from lenders and banks, is deemed to be a safer bet versus those working in the private sector. Lenders essentially recognise the stable employment that the public sector staff receive. They treat it as reliable income, and there's often a huge demand for homes in and around hospital infrastructures as well. This is why lenders generally tend to lend high proportions to NHS staff and will look favourably on NHS staff, even if you've only been employed for a very short period of time, or even if you've got any unsecured debts, they will look favourably upon your situation. So in terms of looking at Debt Awareness Week more closely, the first question I'll put on this webinar is what to do if you can't afford your mortgage repayments. So this won't be the first time we've heard this. Our experts have heard these words from our clients, our loyal clients over the years. First thing to do is don't panic. There are plenty of options available to you if you're struggling to afford your mortgage repayments. Main thing to say first of all is don't ignore the problem. You need to deal with it. So first thing to do, we'd advise you is contact your existing lender if you've got a mortgage already, and just say to them that I'm really struggling with my mortgage payments. What are my options? Now, part of the mortgage charter, which I'll go on to discuss in a few slides' time, means that the lenders are there for you to try and help. Okay, they're on your side and they want to make sure you don't get repossessed and you've got to sell the property to pay the mortgage off. If you can't afford it, they will provide you with options. But worst thing you can do is ignore any letters that come through and bury your head in the sand. Speak to your lender first and foremost. There will be options and you'll feel a lot better after speaking to the lender to see what those options are. And the mortgage charter, as mentioned, essentially in response to, I guess, the cost of living crisis, which was born primarily out of the mini budget, the disaster of the mini budget, which Liz Truss put into force in October 2022. In response to that, the mortgage charter was born. And essentially, it's an agreement between the government, the FCA, which is the Financial Conduct Authority, and all sort of major lenders out there to effectively provide an option to those people who are struggling to maintain not only the mortgage, but all the other bills in terms of utility bills and all your general outgoings on a monthly basis. Essentially, what it will allow you to do is maintain the mortgage itself if you're struggling. And there's three different parts of the mortgage charter, which essentially are on the borrower's side as opposed to being on the lender's side. So let's go through these and explore them. So the first one from the mortgage charter is that banks generally will not force a borrower to leave their house for a minimum period of 12 months following the first missed payment. So if you have got a missed mortgage payment, as a minimum, you've got 12 months to sort it out, and there are plenty of options available to speak to and sort of debt advice charities you can speak to try and work it out. So don't panic. You're not going to get repossessed and get a bailiff come around your house the next day and you're going to be kicked out of your property. They also allow existing mortgage borrowers to lock in a new deal up to 6 months in advance of the current deal ending. And that obviously plays on market volatility. So if rates increase, it doesn't matter if you've already locked a rate in. If rates get better after you've actually reserved the rate, we can actually switch you onto a new deal free of charge up until the current product finishes as well. And the major one, which most people generally take advantage of since the mortgage charter was launched, is the option to temporarily switch your mortgage onto an interest-only basis, okay, under the mortgage charter without any mortgage underwriting or any affordability checks being done. So quite simply, you've got the option to speak to your lender and say, hi, I'm struggling with my mortgage. Can I switch on to interest only? And they'll allow you to do that for up to a maximum period of 6 months. Bear in mind that if you do that and you agree to put the mortgage on interest only for 6 months, that is going to increase your mortgage term by 6 months. So if you had a 25-year term at the start, you'll have 25 years and 6 months to go because, of course, you'll then have 6 months of interest, which you have to repay at the end of the term. So it's an expensive way of borrowing, but as a temporary fix, if you are struggling to pay your mortgage and bills, you can switch your mortgage on to an interest-only basis. Speak to the lender and ask them about the mortgage charter, and they can discuss options with you. So as I said, the mortgage charter essentially is a short-term solution for those of you struggling to pay your mortgage. Okay, it's not the best long-term solution. So obviously you need to try and plan how you're going to get out of the situation you're in if you are struggling to pay the mortgage and pay your bills on an ongoing basis. So let's look at longer-term steps available to you. to try and counteract those of you who are struggling to maintain your mortgage payments and pay your bills. Generally speaking, just that's the last thing we want to do as mortgage advisors is see any of our clients that we advise on have their property repossessed in the event you can't afford to pay the mortgage and the bank has got to sell your property in the long term to pay it back. So let's look at options you can consider in the long term. So as I mentioned already, first port of call is contact your lender. Number one, speak to them as soon as possible, as soon as you are struggling to pay your bills. And they've got dedicated staff which are trained to speak to people in the situation, and they can offer all sorts of things like extending the mortgage term. So you pay less per month and you extend the mortgage so that you reduce your bills down. Even payment holidays. So you might be that they're allowed to have a payment holiday for you to catch up for 2 or 3 months. Of course, you'll pay more interest by adding those 2 payments onto the end of the mortgage term. But that's some short-term options you can look at. So payment holidays is not as common as it used to be in the mortgage market, but is a temporary fix, potentially as long as 3 to 6 months with some lenders. Interest is rolled up, but if it allows you to catch up, pay overdrafts off, pay credit card bills, prioritise some unsecured lending and get back to the mortgage, then speak to the lender and see if they'll allow that for you. Number 3, you can reduce your payments. Okay, you can speak to the lender and say, look, I can only afford to pay £500 a month if your mortgage, as an example, is £800 a month. They will be flexible. Speak to your lender and just say, look, I can afford to pay this amount for, say, 6 months. Can I catch up? Can you add the remaining balance you haven't paid onto the mortgage? So there's an option to reduce your payments by essentially negotiating with the lender and agreeing a payment amount based on what you can afford. And they'll run through some means tests with you. So they are there to help. So speak to your lender and see what they can do. Check for any government mortgage schemes. So some people are eligible for the SMI, which is the Support for Mortgage Interest Scheme. Some people might even be eligible for the Mortgage Rescue Scheme as well in parts of the UK. So yeah, speak to the lender and see if you do qualify for any government support schemes for a mortgage. So if you are struggling to pay your bills or your mortgage, there's plenty of options available for you from a government help as well as the lender. But first port of call, as I mentioned, I keep mentioning, is speak to your mortgage lender first of all. They are there to help you. You can seek independent financial advice. So if you're unsure about your options, speak to a debt advisor, speak to a debt charity, speak to a financial advisor. Okay, they'll have access to all sorts of resources to help you. So it's not only the mortgage lender that can help you, but there are other bodies out there which are really good, which are sort of designed for this purpose. So if you are struggling to maintain your mortgage bills and all your bills generally, get out there and seek the support you need. It's free advice, so get out there and have a chat. Reevaluate your budget. So go through your bank statement and look at what you do need as definite and what you don't need. Are you spending money on takeaways every Friday night or every Saturday night, which is meaning you're spending 150 or 200 quid a month more? Are you going out too much and drinking too much alcohol? Reevaluate your budget and see what you're spending money on. The amount of people we speak to from a mortgage perspective that never look at their bank statement and realise they've got 3 subscriptions for Netflix, for example, or they've got payments they don't realise they're spending on social occasions, going out, or even on gambling in terms of they've got £25 every other day going out to William Hill or Betfred, for example. So go through your bank statement, reevaluate your budget, have a category on the left-hand side, which is bills you have to pay, and on the right-hand side, things which are nice to pay. And you can soon see that actually there are savings to be made where you can reevaluate your spending. And that might be that even doing that very quick exercise might get you sort of on the straight and narrow, so to speak, in terms of being able to afford your mortgage. Number 7, worst case scenario in the long term, you can look to sell the property. Obviously, you're not going to sell the property straight away. It does take 3 or 4 months to do. But if you are really struggling, is there an option to downsize perhaps to a different area, to a smaller property, so that you can walk away from the current mortgage if it's not affordable, and then take out a new mortgage on a smaller property, on a smaller loan amount, which is affordable to you on a monthly basis? So the main thing to avoid, number 8 on this list, is just simply try to avoid being repossessed. Okay. If you are getting letters through from the bank, if you are at this stage, then don't bury your head in the sand. As I said, seek legal advice, speak to your lender and say that we don't want this property repossessed. What are the options? There will be options available for you. But yeah, so as part of the mortgage charter, as soon as you've got one first missed mortgage payment, you've got a minimum period of 12 months to stay in the property. Okay, so you have got time to resolve it. So don't panic. If you are struggling with your bills, there is plenty of help and resource out there for you. Okay, so moving on to the topic, does it make sense to consolidate your debts into your mortgage? So by debts, I'm talking about any unsecured lending, so credit cards, any personal loans, or any hire purchase agreements, for example. People often have got high payments on these, on high rates. So the advantages of consolidating any debts into your mortgage. Let's go through those first of all. So first of all, Low monthly repayments. So there is an option, and there is a school of thought that if you consolidate all of your payments, so say for example you've got a car finance agreement and two credit cards running alongside a mortgage, if you consolidate those two credit cards and the loan into the mortgage, you can get a low monthly payment. That is true because often with mortgages, the rate you can pay is a lot lower than you'd get on sort of finance agreements and credit cards as well. Okay, so that will reduce your monthly payments down. It also means it provides you with one single payment, which is easier to manage rather than having sort of 3 or 4 separate payments going out of your account on a monthly basis. Lower interest rate, as I've touched on already, you can get a lower interest rate on the mortgage versus often really high and expensive credit card rates, as well as loan and higher purchase rates. Okay, and it might also temporarily improve your cash flow, giving you more disposable income to pay for all of those bills, especially in sort of the current climate where you're seeing things like fuel and energy increase off the back of the Iran conflict. And it may also improve your credit score by clearing some of the unsecured debts. A lender will see on your credit report that actually you've borrowed money, but you've paid the whole thing back, regardless of whether you've done that through the mortgage. It then shows that obviously you've got an ability to borrow money and pay it back on time. So those are the advantages or main advantages of consolidating your debt into the mortgage. There are, however, of course, disadvantages we need to make you aware of as a responsible mortgage broker. So what the disadvantages are of basically including debts into your mortgage, first and foremost, which needs to be highly considered, it will extend your repayment term. So going back to what I mentioned earlier about the mortgage charter, if you take an interest-only mortgage for a 6-month period, or take a holiday on the mortgage for 2 or 3 months just to allow you to catch up and perhaps pay your overdraft up, as an example, okay, that is going to extend your mortgage term, and that means more interest in the long term. So although it's a short-term advantage for you, you need to think about the long-term effects on interest and how much you're going to pay over the term of that mortgage. Bear in mind as well that a mortgage is secured against your home. It's a secured loan. An unsecured loan, worst case scenario, if obviously you couldn't afford to pay an unsecured loan, it's not secured against an asset, so you're not going to lose an asset. If you don't maintain your mortgage payments, that is secured against your property. So in the long term, should you not be able to afford your mortgage for a long period of time, eventually the property is going to get repossessed. It's going to be sold by the lender to pay their debt back. There are also additional fees involved with consolidating debt. So you've got things like early repayment charges if you're tied into an existing mortgage. You've got an arrangement fee with a new mortgage lender as well. So it might be you want to consolidate, say, £4,000 or £5,000 into mortgage, but you might have to pay £1,000 fee for a new mortgage product just to get that. So you're then paying 20% of your debt, adding that onto the mortgage, just to give you that facility in the short term to pay your mortgage off. To pay your debts off. There's also the risk of negative equity, which basically means if you add too much onto your mortgage, so say for example you've got a mortgage of £180,000, you've got £20,000 of unsecured debt. If your property is worth £200,000 and then you basically consolidate your £20,000 debt on top of the £180,000 mortgage, straight away you've got a mortgage which is now worth £200,000 and your property is worth £200,000. So guess what? If you sell the property, you've got no equity and you walk away with nothing. So just bear in mind, if property values change, if the property market changes, there is a risk you might be in negative equity in the future, should you actually consolidate debt into your mortgage. In terms of borrowing as an NHS employee, okay, First Mortgage, as I said, offer a completely fees-free service for all NHS staff as well as MFT staff. The general rule of thumb is that most people can borrow between 4 and 4.5 times income. However, there are a lot of lenders that we work with where you can borrow more than that. So Principality Building Society, as an example, you can borrow up to 5 times income with them. As an NHS staff member, regardless of what role you're in. Foundation Home Loans is a separate lender. You can lend up to 6 times income. And there are even options available for you as a first-time borrower, which I'll go on to in a minute, where you can borrow 6 times income, either as a junior doctor or in any job role, as long as you meet certain eligibility criteria. There's also a few schemes available for those of you who are looking to buy, who haven't got a deposit, who have been struggling with debts, but you still want to get on the property ladder. So you've got a 0 deposit mortgage, which is available through Skipton Building Society. I'll touch on it very briefly. As long as you've rented for a minimum period of 12 months in the last 18-month period, it allows you essentially to buy a property as long as your credit checks come back clean, with 0 deposit. So if you have been struggling with debts and you want to buy, you don't have much of a deposit, speak to the team because there will be options available to you, and our experts have dealt with so many NHS staff in the past. We can advise you as regards to what your options are. In terms of other schemes, so if you've not been renting, if for example you've been living with family, but you still want to get on the property ladder and you're desperate to buy, but you've had a few issues with debts, again, there are mortgage schemes available, the likes of April Mortgages, who's a big mortgage lender in the intermediary market, will allow you to borrow up to 4.5 times income, essentially, as long as you've got a minimum income of £24,000 household income. Okay, and that's available to yourself. And even if you've got a partner who's not in the NHS, you can still borrow as much as you want to borrow for a new property if you haven't got a deposit available to put down. Okay, looking at other options. So in terms of no deposit schemes, you've touched on a couple there available for you. So if you are struggling with debt but still want to buy, you can still buy. The Helping Hand mortgage available through the Nationwide Building Society is another really good fundamental scheme for first-time buyers. We use this a hell of a lot with NHS staff who are struggling to basically afford to borrow the amount they need to borrow to buy a property. The Helping Hand scheme basically allows you to borrow up to 6 times income, as long as as a single person, your basic salary is a minimum of £30,000 per annum. As a joint household, your income must be a minimum of £50,000 per annum. Okay, so let's go through and look at other parts of the webinar for you. So financial protection, so as I mentioned at the start, okay, we're here to offer you free financial support. So we want to make sure that not only you get the mortgage and you can move into the property or remortgage the property you currently own already, we want to make sure that is affordable both now and in the future. This is why it's really important to ensure you've got financial protection provisions in place to ensure that should the worst happen at any point throughout your mortgage term, you can still afford the mortgage. We don't want to get your mortgage and then we find out that actually you couldn't afford it 2 or 3 years later on because something's happened. If there's been a death in the family or you've been diagnosed with a serious illness, we want to make sure that should the worst happen, you can still afford to pay your mortgage and pay all your regular bills. So as part of our advice service, well, not only will we advise you on the best mortgage options, but we'll also advise you on the best protection options to ensure that is fully protected at the same time. Okay, to recap on the support First Mortgage can provide you. So go to the mortgage support section on the financial wellbeing page as the guys at MFT are advising. I'm going to end the webinar itself with a very quick mortgage market overview to see where rates are. So I wrote this probably about 4 weeks ago and then had to rewrite it completely. The Iran war has changed the landscape in the mortgage market and I guess the predictions for interest rates completely. So up until 4 weeks ago, I would have said to you that the prediction for 2026 is that we'll probably see 2 to 3 further base rate cuts down and it'd be all going merrily and inflation is going to come down and we're looking at the base rate being around 3% by the end of the year. Currently, of course, the Bank of England base rate is at 3.75%. That was held at the last Monetary Policy Committee meeting on the 5th of February. Tomorrow is the next meeting of the Bank of England base rate. Policy deciders at the Monetary Policy Committee, the general consensus now, because of the Iran conflict, is that there's absolutely no chance the base rate is going to go down. The reason being is that with increased oil prices and increased fuel prices, we are looking at inflation going up quite considerably over the next few months. And those high inflationary pressures means that the base rate is going to be held tomorrow at 3.75%. It might even potentially increase up to 4%. I don't think that's likely. Possibly the next base rate committee meeting in May, but I think tomorrow it's going to be held at 3.75%. So where are we in terms of expectations of interest rates? So I think now, based on what's happened in the Iran conflict, that has had a huge effect globally on the economy, but also in the UK, more pertinently. I think we're probably looking at the base rate being held at 3.75%, if not rising to around 4%, very, very worst case scenario, 4.25% by the end of the year. It really depends on how long this conflict goes on for. If it's resolved and there's some sort of peace agreement drawn up in the next 2 to 3 weeks, it might be that base rate still comes down by the end of the year, but current predictions are that we are looking at inflationary pressures being quite high over the next 6 months because of oil prices, because of petrol prices at the pumps, and therefore it's very unlikely the Bank of England base rate is going to reduce the base rate down, which has an impact on mortgage rates. So mortgage rates have climbed a little bit in the last probably 3 weeks since the Iran conflict started. Mortgage rates generally across the board are probably around 0.3 to 0.4% higher than they were. And that's because lenders are pricing in what they expect to happen with swap rates, which is basically the rate which lenders lend to each other in the interbank market in the background. So we are going to be expecting now that mortgage rates are going to tip over 4%. Generally, there are still a handful of lenders who are lending under 4% with a high deposit. Sorry, with a high deposit of 40% of the value of the property on either a purchase or remortgage. but we are probably going to be expecting mortgage rates to continue to climb. But as soon as this conflict has been ended or some sort of peace agreement is there, we should see some stability come back in the market, not only with mortgage rates, but also the Bank of England base rate as well. So hopefully that's been a useful recap of the mortgage market itself, what you can borrow as an NHS staff member, but more importantly, alongside Debt Awareness Week, looking at options to basically counteract any struggles you've got with debts if you are struggling to maintain your mortgage payments. What your options are. There's plenty of options out there. The main one to summarise is speak to your mortgage lender, seek support. There are plenty of bodies out there that are there to help you. You're not alone. This happens to a lot of people. If you are facing any sort of debt crisis, reach out and speak to us as well. Any of our experts here can advise you what the best options are from a mortgage perspective too. So that's the end of me. I'm going to pass you over to Anthony at Payplan. So I'm going to turn my camera off, and Anthony will come on now and discuss any help that he can provide from Payplan to all MFT staff as well.
Thank you so much, Ben. Really appreciate that. And thanks for giving me the time to do a quick introduction and update. I've got some slides for you, so I'll just start sharing those as well. So I'm just bringing them up now. Here we go. I'll just do a quick intro. My name's Anthony. I'm one of the partnership managers at Payplan. So I work with organisations across the UK to ensure that people are aware of what free advice looks like and how it can be accessed. And one of the reasons why I really like to do that is because I know how hard it can be to ask for help. And debt, unfortunately, can be one of those topics that's difficult to have a conversation around, and it shouldn't be, but unfortunately it can be. And that's where we can come in. We can make life simpler and really help you to understand what your options are when it comes to dealing with debt. So I'm just going to spend 5 minutes giving you a bit of a whistle-stop tour on what that looks like and how you can access that, because as Ben mentioned, we've recently partnered with Your Good Sales at MFT, so I'll show you how that all works. We know that when someone is in debt and is struggling, whether that's with credit cards, with loans, overdrafts, could be a buy now, pay later debt, it could be mortgage. Often that can be a lonely place to be. You can perhaps feel that you're the only person that's going through that. So let me start by setting the scene to say you are not your own. And as Ben just mentioned, he said exactly the same words. You really aren't on your own. You have a lot of support out there to help you. 7.3 million adults in the UK currently need debt advice. This comes from the Money and Pension Service, which is a government body. That's a lot of people, and that's just a kind of a rough number. The reality is it'll be a lot larger than that. So let's just give ourselves a bit of a pat on the back and just not feel like we're under pressure. You're not on your own. There's help out there. So what is the help that's there and that's been built in to support MFT colleagues and the wider community within the NHS? Payplan itself, we are a fully regulated provider of free debt advice and debt solutions, which means we're quite different because we don't just offer you the advice, we can come up with a solution and offer that to you as well. So that makes it easier to move forward. We've been around for a long time. 34 years we've been actually offering free and confidential debt advice. And originally we were set up as a service for the police. We now help a wide range of organisations and individuals to access support. And actually, right now, 4,500 new clients come to us every single week, either through our free phone service or our online services as well. So that just really gives you an idea of how many people need us right now. And if that's you, then please come and get that support. We offer very holistic services because we can cover all of the options out there when it comes to debt advice. And we are trusted by the nursing community and have been for a long time. So we, for example, run Unison Debtline. So if you're a Unison member, then we're built into that service as well. We work with RCN Foundation, Cavill, NHS, and the list goes on. And we're also recommended by government as well, which is really important that you know that we're trusted, but also they will only recommend free services. That's incredibly important. So you know the advice you're going to get doesn't come with a charge. One of the things I get asked a lot is there a best time for me to call in terms of when's the most appropriate time I should reach out and ask for help if I think I'm struggling or I am already struggling? And the answer to that would be as soon as you can. The reality is most people do struggle with debts on their own for quite a long time before reaching out for help. As you can see here, most people it's over a year, and you don't need to do that. We know that delaying access to support can often make things more stressful and can have wider impact on your health and well-being. So one of my key takeaways for you today is access support as soon as possible, because you'll feel a lot better for it. But what does debt advice look like? What can you expect? Well, however you come through to us, whether that's over the telephone or online, what you can expect is to speak to a friendly advisor who will work with you in a way that feels comfortable and at a pace that's right for you as well. We don't have any wait lists in our service, so you can access support immediately, but not everybody wants to do things as quickly as that, so you can do things one step at a time. And what we'll do is work with you to understand your full circumstances so we can actually pinpoint the best option for you, the best type of solution that we can provide. And so what we will do is cover all of the options that you could consider, and we'll make a tailored recommendation of which we feel is most appropriate to help you and your current situation. That comes with no obligation at all. So you don't have to take our recommendation. You could take one of the other options that we may talk to you about. Equally, you could just find out what your options are and walk away. So you can do that without any commitment, and speaking to us has no negative impact on your credit either. So you can do that without any risk. And when people come through to us, we'll make sure that you get lots of information about what's out there in terms of help, but also how to deal with different debts in different ways, because some debts will have more of a priority than over others. So we'll make sure that you're aware of all of that. We'll also make sure that you're connecting with wider services for additional support. So whether that's accessing grants, mental health support, we make sure that's all built into our offering. Of course, our background is working with those who are in employment, but it might be that you have a partner that needs help. We help anyone within the UK, whether they're employed, self-employed, unemployed, whether they're retired. Self-employed we just mentioned because that's quite unusual. Most debt advice services don't offer that form of help, but we do. We help everybody. A full range of debt solutions, and then help around budgeting, income maximization, just making sure that you're making the most of the money that you have. And one of those things might be ensuring that you're receiving the benefits that you're entitled to. Last year, £23 billion worth of benefits went unclaimed in the UK. That impacted 8 million households. And so that could be a way to resolve a debt problem as well, actually understanding what's available to you in terms of household income. And certainly gone are the days when people want to contact us in one particular way only. When we first started our service 34 years ago, we were available over the phone, but we've really worked hard to make sure that you can connect with us in a way that's comfortable. So whether that's through live chat, text messaging, whether it's through our main website, email, we also offer sign video for British Sign Language interpretation, and also Language Line for over 240 different languages. But WhatsApp has actually become our most popular way of working through debt advice. We find more people come to us that way than any other way now. And I think that's because people can contact us in a way that's familiar. Maybe you speak to friends and family and colleagues over WhatsApp day in, day out, like I do. And that means that you can connect to us in a way that you feel is right and is trusted. One key thing I like to say to people is the real positive impact of accessing debt advice. I think it's underestimated the toll that having debt problems can have on your mental health and well-being. So let me just share a little bit of insight around that. When people come to us for the first time with their debts and ask for help, 85% of people tell us that having those debts has impacted their mental health and well-being. And that starts to ripple into many other aspects of people's lives. So whether that's within the home and relationships, whether it's in the workplace and day-to-day living. But let me just shine the positive light on all of this and draw your attention to the section on the right-hand side, which we call Life After Debt. What are the positive impacts of seeking debt advice with us? 93% of people tell us that once they've done that, their mental health and well-being is a far better place and their stress levels have reduced. That's a really significant impact. I did debt advice for many years. I've been with the organisation for 21 years now, and two of the common things that I hear from people and used to hear from people back then was a big sigh of relief when people finally asked for help. And then also people will often say to me, I wish I'd done this months ago. So often that's because they feel a weight has been lifted. The other one that I'll point out is 69% of people then feel that they can open up to friends and family and get support from their wider community as well. There are so many positive impacts of having free and confidential debt advice. So the last thing I'm going to share with you is how you can do that. We want to make life easy and make sure that you can access that either over phone or with a click of a button. So We have our free phone service, 0800 072 1206. We're open Monday to Friday, 8 in the morning till 8 in the evening, and on a Saturday, 9 till 3. We're also available online, and what we've already done in anticipation of us working closely with MFT is we've created a bespoke website page for you. So you can use this link, or you can scan the QR code on the top right-hand corner, and you can get access to immediate support, and we know that you're part of the nursing community, and that's really important so we can tailor advice around what your needs and wants are. And just so you can see how that looks, so you'll know it's the right one that comes through, this is what the page that you'll see, and it has the logo in the top right-hand corner for MFT. And then also available, and will be available at, in the near future, will be leaflets that you'll be able to access. We're getting some of those posted out to you as we speak, that will have all the information of how to take that step forward. That's everything I've got for you today, just a quick overview of the service, and I hope that helps you and your family if you need it. Thank you.
Perfect. Thank you, Anthony, very much for that. So that's the end of the webinar today between MFT, First Mortgage and PayPlan as well. Hope that's been useful. If you've got any questions from anything that I've said from a First Mortgage hat on, or from Anthony from a PayPlan perspective, please do reach out and speak to us. We're here to help and advise you if you are struggling with any debts. Hopefully that's been useful, and we'll see you again at the next webinar. Thank you.